I think this is going to be a really bad quarter. One piece of evidence, we haven't, like I said, this is total guesswork, but Electric was just reporting that Tesla starts preparing Model Y rear-wheel drive deliveries amid a drop in demand. I think this is symbolic of really what's happening across the board right now, which is that Tesla originally, only delivering those super high price versions, the performance and dual all-wheel drive dual motor version of the Model Y to start. The rear-wheel drive version wasn't supposed to really be delivered until late 2020, but now all of a sudden they're contacting customers and asking them for imminent delivery of the Model Y rear-wheel drive. This is even more confusing when you consider that this is a time when Fremont is shut down. So it's like, how did they even build that if the factory was shut down? But this to me points that, and this is sort of more anecdotal evidence that I've been reading, is that Tesla's been contacting a bunch of people who are pretty far down the list for Model Y reservations and asking them to take delivery, because I think a ton of people are canceling. That's even what this Electric article says. They're speculating that a lot of people are just canceling their orders. And I think this is indicative of not just the Model Y, but that's probably been happening for the Model 3, for the Model S, for the Model X. And this isn't just a Tesla problem. That's so important to keep in mind. I feel like I'm caveating my projection so much because I think it's like a shocking number, and this quarter is going to look so ugly on every business and financial metric for like every single company in the world. That is just what's happening right now. No company can escape this macroeconomic pressure and situation, and it's just leaching into every aspect of the economy. I mean, the economy goes down, less people are going out, less people are spending money on things, especially big ticket items like cars. Cars are some of the first things to get hit in any recession, and Tesla is going to do way better than its competition. It's going to continue to gain market share. It's going to continue to outsell, GM and Ford. It's going to continue to be the leader in electric vehicles, but the entire end market and demand for electric vehicles as a whole is shrinking, and Tesla sales are going to shrink. And so, all right, enough hype. Let's just get into the estimates. So this is hypercharts.co/Tesla. This is the vehicle deliveries chart heading into now. As you can see, blockbuster Q4, they delivered about 110,000 cars. This was a record for the company, breakout quarter. But remember, Q1 2019, very weak. Seasonally, Q1 is their weakest quarter. Also, Q1 2018, you can see, was pretty weak as well. So I'm expecting, this is the number we're comparing it to, Q1 2019. Here are my estimates. I'm looking at about... you can actually see the number here, but 65,000 cars delivered total. And this is, remember, deliveries. So this is just what I'm estimating right now. It's total guesswork. And this is about 5% growth from last year. So I'm still assuming Tesla grew from last year, but I just think the entire end of the quarter just vanishing as the global economy shut down, crushed European deliveries, crushed US deliveries. A ton of people canceled orders. It made it super hard to actually get the cars to customers who had ordered and paid for them. And I think that pressure is going to be seen on every facet of these sales. And so that is what it is. I think this translates into revenue of about 4.3 billion for the quarter, which would be lower than 4.54 billion of last year. So from a financial perspective, this is going to get pretty ugly too. As you can see, we can zoom into revenue here. So revenue not looking good. This would be a year-over decline of about 10% or 8%. Gross profit will be going down as well. Operating income, I have it coming out at negative 535 million, down from negative 522 million. And remember, these are just estimates based on my model. As you can see for the gross margin here, I assume that gross margin, this is where I try to be super conservative, was 12% versus 12.5% in Q1 last year, which was a super horrible number for Tesla, their lowest they reported in years. I'm assuming that gets even worse at just 12%. And that's the reason for these, huge losses and the weak gross profit overall for the company.